Well, first, I've got an 8-hour course on the causes of the financial crisis.
Great.
Which is on YouTube.
Go ahead and start.
Which is on YouTube, on my channel. So everybody should subscribe to my channel on YouTube. There's just a lot going on in the financial crisis, and to untangle it all requires a lot of time. It's not simple. But all you have to know is that going into the financial crisis, housing market, mortgage market, financial markets were heavily, heavily, heavily regulated.
They were, because a lot of people say that they weren't.
No, everything a bank does, everything, it has to get permission from. Do you know that at JP Morgan, the bank, JP Morgan Chase, 150 government employees, bureaucrats, regulators, go to work every day at JP Morgan's offices. They sit next to JP Morgan employees and have to sign off on their decisions. Nothing in the banking sector gets done without regulatory approval. Not the type of loans, not the type of investments, not the type of off-book shenanigans. Everything that they do has to be approved by some government official. So this idea that we have a financial industry that's unregulated, it's just bizarre. It's just weird. Nobody's ever worked in a bank. Nobody's ever looked at a bank. Nobody's ever studied banking in the United States. Everything is regulated. There are a few decisions that are not. So, and then on top of that, you've got things like too big to fail for the big banks. So government has basically told the big banks, and this has been in existence at least since 1984, when you make a lot of money, you get to keep it all. If you lose it, we'll bail you out. All right? That creates weird incentives. That creates perversion, right? And so, and then the government decides we want more Americans to own their own homes. Like it was always 63%. We want it to be 70%. This was under Bill Clinton. This is under George Bush. It goes even further back. Home ownership is both a liberal and conservative big issue, right? So we subsidize it. We have Freddie and Fannie Mac, Freddie Mac, Fannie Mac, and they subsidize it through lowering your mortgage costs, through subsidizing the mortgage. And
how did they do that? Low interest rates, or?
Yeah, I mean, basically, so I'm Freddie Mac. I buy mortgages from the banks. So I buy them, I pay a lot of money for the mortgages. So that provides an incentive. So I overpay, if you will, right? Higher than what the market would typically pay. I incentivize the banks then to issue lots of mortgages. And they're willing to issue lots of mortgages, even to people who maybe cannot pay, because they can sell them to me. And I don't really care if people can pay or not, because my goal is to get 70% people into the houses. I don't care if they can pay for it ultimately. That's for somebody else to worry about. I'm just a bureaucrat who's getting compensated based on how many people are getting into homes. The bank doesn't care because the bank doesn't keep the mortgages. It's selling them to me. So I keep buying the mortgages and I keep subsidizing them by paying a higher and higher rate for them. And I keep telling the bankers, oh, we need you to go into poor neighborhoods. We need you to go into neighborhoods where people cannot afford to buy their own home and convince them to buy their own home in spite of that. Because otherwise we won't meet our goal of 70%. And by the way, the government has told me that I have to buy X number of junk bonds, of really poor quality loans. And then and by the way, the reason I can afford to overpay is because me, Freddie Mac, right? I have a government guarantee that I can't go bankrupt. So I can overpay. I can lose as much money as I want because the government's going to bail me out. And the government did bail them out. Freddie and Fannie today are bigger than they were before the financial crisis.
Really?
They buy more of the mortgages. They have, they're much larger, right? So, and because the government bailed them out. The government basically, they could issue debts. They could raise money at interest rate as if their bonds were risk-free. Because they were, because the government had a guarantee.
Now, and that's a government, Fannie and Freddie Mae is...
These are government, private, what do they call it? Public-private partnerships. So this is a kind of a composition entity. It has shareholders, but the government guarantees all their debt.
But it's not unattached. It's not free.
No,
it's not unregulated.
No, and people like Dodd and Frank. We've got this bill called Dodd and Frank, which is this, and they were huge critics of capitalism and huge critics of the financial industry and huge. They won the payroll of Freddie and Fannie. I mean, I'm not making, this is not stuff that is a conspiracy theory. Mm-hmm. If you look at who Freddie and Fannie were donating large amounts of money, whose campaigns, it was all first, they paid everybody off. So Republicans, Democrats, everybody got money. So, and they still do. That's why they haven't shut them down, because it's a cash cow for politicians. But then Don and Frank in particular got particularly high amounts of money. And they were the guys who protected Freddie and Fannie no matter what happened. In the early 2000s, there was massive fraud in Freddie and Fannie. They couldn't even come up with a balance sheet and an income statement for years. Nobody actually knew. And nobody cared. Nobody went to jail. They were completely protected by the politicians. And they continued to do everything that they did. And when financial crisis happened, nobody blamed them. No, it's Wall Street. Because think again in terms of moral terms, to bring it back to morality. They're public servants. This is why we never blame bureaucrats. We never blame the regulators. We never blame the bureaucrats. They're just doing it out of the goodness of their heart. They're not in it for any self-interested reason. They're just trying to make the world a better place. They don't make a lot of money. They don't get bonuses. They're just altruists who work for the government in the common interest and the public good. Now, none of that is true, but that's how we perceive them. Oh, but those businessmen, they're in it for themselves. They're in it for money. They're in it for profit. Therefore, they must be the bad guys. When we established a Federal Reserve, we gave one bank and one guy, the guy who runs the Federal Reserve, this unbelievable power over the entire U.S. economy. We didn't trust markets because markets are full of these self-interested people, but we trust one banker, Alan Greenspan, Ben Bernanke, Powell today, to make these decisions that affect every single life in the United States, and maybe every single life on planet Earth is affected by the decisions the Fed makes. And yet we have no problem with one guy making that decisions, or a group of 12 of them making those decisions. Why? Oh, because they're not making any money doing it. If they were a profit-seeking enterprise, then we'd be suspicious. But no, they're all good public servants. We love public servants because they're servants and because they're not in it for themselves. So even the way we think about the financial crisis is framed in terms of self-interest of Wall Street versus those wonderful, government-run entities that are just there to help the common man and to help people and to do the right thing. One other aspect of the financial crisis, for completion's sake, Federal Reserve kept interest rates below the rate of inflation for 2.5 years. In other words, this is the MMT kind of thing. They printed a lot of money. That money went somewhere, and it went into housing primarily. And that's why you got this huge bubble in housing during the late 2000s. And that had to collapse. It was artificially created by the Federal Reserve. You can look this up on Google. Paul Krugman in 2002, actually in an op-ed, in the final paragraph in an op-ed says, now that the dot-com bubble has burst, and in order to prevent a future recession, what I suggest is that the Federal Reserve create a housing bubble. Period. 2002, New York Times, op-ed. Just look, New York Times, housing bubble, Paul Krugman, and you'll get the op-ed. This is how Keynesians think. This is, so the Federal Reserve created a housing bubble. It's exactly what we got. It's exactly what Alan Greenspan did. And the bubble burst, and that's what we got. None of that has to do with capitalism. There is no capitalism in those markets. There is no freedom in those markets. There is no choices in those markets, above and beyond the bad choices created by bureaucrats and politicians. So, no, the fact is that that's true of all the complaints against capitalism. Capitalism works. It truly is a great system. There are no such things as what people call market failures. Markets don't fail. Markets go down, they go up. Some products work, some products don't work. But there are no systemic, market-wide failures because nobody has that kind of power in capitalism.
Because it's diversified.
It's hugely diversified, and it relies on the individual decisions of hundreds of millions of individuals. And hundreds of millions of people don't all behave in the same way suddenly. They don't all choose the same thing. They don't act in the same way. And so you just don't get the kind of problems that you get when the Federal Reserve dictates interest rates for everybody. Has to be this way. Or when the federal government decides 70% of Americans need to live in houses, need to own their own home. Why? Who made that decision? Why is the government interfering in my decision of whether to rent or buy? Why is it any of their business? And they do. For example, even today, right? If you pay taxes, you get a deduction on the interest you pay on a mortgage. You don't get to deduct your rent. Why? Why is the tax code benefiting home ownership at the detriment of rent. Why is it any of their business how I use my money? So there are millions of little subtle ways in which the government is interfering in my decisions and your decisions, manipulating our economic behavior. And that is ultimately what leads to problems and crises and disasters and conflicts.
So could you summarize it as saying artificial versus organic supply and demand?
I mean, that's one way to think of it, but I also like to think of it in terms of freedom versus control. Capitalism is about freedom. Freedom in individuals to live their own life for their own purpose, based on their own values, to pursue their survival and their thriving as human beings based on their own values. And that's what capitalism is. Capitalism is a system that leaves individuals free to pursue their values, to pursue their lives, to try to make their lives the best lives that it can be. And we never really discussed kind of the morality of egoism, but we discussed that, I guess, a little bit. But the idea is that's virtuous. That's what we should be teaching kids. That's good. What's good, the good, is to live the best life that you can live. It's to pursue the values that are most important, that are most going to contribute to your long-term thriving as a human being. And that means to use your mind. It means to be honest. It means to be productive. It means a bunch of different things, which Ayn Rand writes about in essays like the book The Virtue of Selfishness and other places. But it's those kind of ideas we need to teach young people to live full lives for themselves, not to sacrifice for others, not to think of themselves, their own life, so little as to say the lives of other people are more important than my life. No, your life is the most important thing to you, and you should live it that way. It doesn't mean exploiting other people. Indeed, exploiting other people destroys your life. Lying, cheating, stealing, not good strategies for living, not good strategies for success in relationships or in business or in any part of life. I mean, I always tell audiences, just try it. Try lying to your best friend for a week. See how far that gets you. It's awful. Try lying in business. You're not going to do business for very long. And stealing is the same thing. You steal stuff, you're basically admitting to yourself that you're incompetent, that you're not capable of producing the values necessary for your survival. You're undercutting your self-esteem. You're saying, I'm dependent on other people in order to live. But to really have self-esteem, to really be happy, you have to be independent. You have to know that you can survive by yourself, for yourself. Stealing is a way of expressing dependence. So a morality focused on that is a morality is I think the result is people who have strong self-esteem, who are happy, who want to pursue their lives, who want to make the choices, the hard choices of how to shape their character and shape their soul and shape their life, but who don't want other people to tell them how to live, what to do. Or they don't mind advice, but they don't want to be forced. They don't want to be coerced. They don't want a gun pulled on them. They want to be left free. So you need that kind of moral code in order to bring about real freedom and real capitalism. But that's what it is. Control breeds disaster. Freedom breeds success.
Hey everyone, thanks so much for watching the episode. If you're interested in contributing to the conversation and supporting the show, there's 2 easy things you can do. 1, click subscribe, and 2, visit our Patreon page where you get exclusive access to the Exploring Minds community.